Hi, everyone. If the stock market feels like a mystery to you, you are in the right place. We're going to slow things down and look at exactly how stocks work without worrying about the money-making part just yet. Let's start with the basics. A stock is also called equity. It represents a literal share of ownership in a company. Imagine a company is like a giant pie. If that company wants to grow, maybe they want to build a new factory, launch a new product, or pay off some bills, they need money. So, the company decides to slice that pie into millions of tiny pieces. These pieces are the shares. When a company sells these slices to the public for the very first time, it's called an initial public offering, or IPO. This happens in what we call the primary market. In this moment, the company gets the cash and the investors get the certificates of ownership. But here is the part that confuses people. Once those shares are out in the world, the company isn't usually involved in buying or selling them anymore. Instead, investors trade them with each other. This happens in the secondary market, which is what we usually call the stock market. Think of it like buying a used car. When you buy a used Ford, you are buying it from another person, not from the Ford factory. The stock market works the same way. You are buying your slice of the company from another investor who wants to sell theirs. So, if you buy a share, what do you actually do with it? Well, common stock usually comes with a special perk, voting rights. Because you're a part owner, you often get a say in major decisions, like choosing the board of directors who hire the CEO. You literally have a voice in how the business is run. So, to recap, stocks are a way for companies to raise money and a way for you to own a piece of the corporate pie. But why would you want to own that pie? How does it actually help you build wealth? Join us in the next video where we'll talk about capital gains and dividends.